Welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about February's Fintech and finreg news. Now, it's been a month for a lot of discussions amongst regulators about various technology topics. In the UK, we've seen that the Financial Conduct Authority has launched what it's calling the Mills Review, which is a review of how AI or artificial intelligence will be impacting the markets. Now, that's looking at it from the consumer perspective, the financial firm perspective, and the overall market structure perspective. So it's a fairly comprehensive review. Sheldon Mills of the FCA is leading this review, and it's being focused in certain areas. Now, I'll note those down. The first is looking at how AI could evolve in the future, particularly looking at topics like agentic AI and the introduction of new digital colleagues, as some people are calling them, how that will impact the market overall. And the second is looking at how these developments will impact markets and firms. That is particularly also related to UK competitiveness. I guess that's both negative and positive. So it'll be looking at some of the risks to the UK as well as some of the opportunities that we could capitalise on in the markets where I am based. There's also the third strand is, as I mentioned, consumers. So looking at new expectations that consumers may have, how I guess it could cause issues for consumers too, one would expect. And the fourth is looking at the regulators themselves. So looking at how the AI trend will impact regulators in the long term. Certainly, regulators such as the FCA have been investing heavily in getting up to speed with AI and understanding how the market's using it, but also how they can use it to conduct their own subtech operations in the future. So definitely very interesting. We've also seen a lot of different discussion papers over recent months from the FCA on this topic. We've seen AI sprints. We've seen the sandbox or the supercharged sandbox be launched, which is supported by big AI player NVIDIA. And certainly the FCA is not the only regulator looking at AI. We've seen that across the board. There's a lot of focus on it from the European level as well. We've seen the European Central Bank chair again also mentioning AI as an opportunity again over recent months. I know that's something that she was talking about last year. She's been again talking about it this month as an opportunity for improving the EU's competitiveness. And there's still discussion about what happens with the EU AI Act. There's a lot of question marks about that as it's due to come into force in the summer. So definitely some things to think about from that perspective. Development from the finreg front, again to do with technology. The SEC, the Securities and Exchange Commission, and the Commodity Futures Trading Commission this month had a big meeting in Washington in the CFTC headquarters about coordinating their approach to crypto. Earlier last year, or the end of last year, I should say, Project Crypto was launched by the SEC, and the CFTC had its own version. Now they've consolidated both under the banner of Project Crypto, and they will be coordinated in their approach. It's interesting to see the dynamic between the SEC and CFTC over recent years. There's been a bit of a turf war between the two, but it seems that now under the new administration, they're both very short-handed, which should also be noted, but they are looking to team up a little more. Both chairs have worked together previously, so are very familiar with each other's work, and they have both been very focused on crypto over recent years as well, and they do seem to be strong proponents for that particular space. So we've seen some interesting developments from the CFTC this month as well on that front. There's a lot of discussion about what we call prediction markets. Some might call it gambling, but derivatives based on betting, so sports betting or political betting, are now coming under the purview of the CFTC potentially. There's a lot of contentious discussion in the US because at the moment, I guess historically, we've seen state by state regulation of gambling. So having something that's at the federal level is a little unusual. Also, it takes the gambling adjacent markets, let's call them, away from the purview of individual state regulators that look at gambling. So I'm not sure exactly what will happen in the long term on that front. There's certainly going to be a lot of industry discussion about it. And there needs to be a lot of focus on investor protection, given gambling can be particularly negative impacts on individuals' lives. So I'm not sure how much access it will be granted to retail traders in that front as well. So definitely something to think about or look out for in the course of this year. On the topic of operational resilience, it's always a sort of ongoing theme, particularly as we see more markets digitalizing. We saw the London Metal Exchange have yet another series of technical glitches over the last month or so. This has been a problem plaguing the LME for some time now. There's a lot of concern about underlying technology and what needs to be done to prevent further glitches and challenges to take it offline. So certainly that is an area that we know all financial market infrastructures are thinking about in light of discussions about things like 24-hour availability, particularly in equities markets. So certainly expect more discussions about resilience this year. Now, ESG doesn't get talked about in the US very much these days, but it is getting talked about in other corners of the globe. This month, HKMA, the Hong Kong Monetary Authority, indicated that its steering group priorities include very strong focus on sustainability. And it showed two of the pillars as part of its strategic priorities related to sustainability this month, focusing on things like disclosure, strengthening market developments, engagement and talent development as part of one aspect, and also looking at transition finance and adaptation finance as well as sort of pillars for the economy. Now, it's interesting to see that so many, and we've seen also discussions between this month, Singapore and Switzerland about sustainability as well as part of their 8th financial dialogue this month. So certainly a lot of discussions globally about sustainability and sustainable finance and transition. So definitely things to monitor from the ESG front if that's something you're looking at. Now, from a staffing perspective, it's interesting to see that ESMA, the big job at ESMA, the chair's job, is up for grabs at the moment. So they are recruiting actively for their new chair to steer the organisation through its next evolution. And now we've had indications from the European Commission that that next evolution could be strengthened. They are, as part of Draghi a couple of years ago, we saw the suggestion that ESMA could become the SEC of Europe. Despite the fact that Europe is not one country, but interesting to see a lot of EU level powers that could be granted to ESMA, not least of which would be financial market infrastructures and giving direct oversight for those entities. Now, it certainly would be a big job to lead ESMA in that particular area. And it's certainly a key focus, and the big focus is around the Savings and Investments Union would be delivering on some of the goals and the ambitious goals, I would say, of the SIU would be a big job for anyone that's looking at ESMA. It's interesting to see at the FCA, we've seen a number of ex-US regulators coming over and helping the FCA with some of their supervisory work, from the SEC and the CFTC, giving some of the experience they've had in other markets and granting them to the UK's market as it seeks to evolve its operations as well. So there's definitely a lot of cross-pollination. I don't expect that to be the case with the ESMA chair job, by the way. I don't expect an ex-SEC regulator to take that post. It will be from Europe, but certainly it's interesting to see how much sharing and discussion is going on across the globe from ex-regulators and current regulators for that matter. From the US side, though, we have seen a bit of a slowdown in rule changes as, again, we've seen a partial government shutdown towards the end of last month. So that impacted some of the progress there. Hopefully, we won't see another one of those. It looks like it's rectified itself. But certainly that does slow down things from the regulatory developments front. And I know a lot of regulation is pending at the moment. I mentioned crypto earlier. One of those is the Clarity Act, which is a key pillar for those in the digital asset space. That is currently sitting within the political houses at the moment and is still being debated. I think some of its key backers have withdrawn their support for it. So there may be some challenges ahead. Particularly Coinbase was a big proponent of the Clarity Act and now seem to be less keen on it. So it will be interesting to see if that goes through further changes as we go through. And lastly, on the EU front, we did see the EU Parliament giving its approval or nod to an offline and online digital euro. Now, there's been a lot of discussion about CBDCs and stablecoins over recent months. And the euro, the digital euro, the central bank digital currency in Europe is certainly something that has been given a prioritization level one would say, for launch. So certainly interesting to see that is making progress and definitely one to watch again. Now, my quick final thoughts for the month. I sat through several hours of discussion in the US on the topic of 24/7 trading. Actually, technically speaking, it's 23/5 trading for the US equities and options markets. Definitely something we're doing a lot of research on at Firebrand. We've got a market infrastructure report coming out this month, so certainly that's going to have a lot of details on that. It's interesting to see these discussions. There are a lot of moving parts to that move. We have expectation that we'll see the largest exchanges that have applied to go to extended hours to 23/5 trading will be able to do that. There is anticipation that will happen by the end of the year, though that may be delayed. We know that there is the consolidated market feed, the trade feed, needs to be extended to 23 hour availability as well before the move can happen. So that the SIP, the SIP as it's known, needs to be extended. So we've got to see the progress with that first. So we'll see that. Keep an eye on that throughout this year, see if it's making progress. We've also got to see DTCC upping its hours as well and changing some of its operational processes to accommodate it. It looks like the DTCC says it's on track for a launch in the mid-year, just as 24X Exchange is going to be launching its extended hours to, I think it's 22 hours of availability for a certain number of US equities. Now, this means obviously there's a lot of discussion globally. We've seen LSEG and the Hong Kong Exchange talking about 24/7 already, examining the move and whether it is something that would be desirable for the markets. We haven't as yet seen much publicly in Europe. But we can expect it. It has been mentioned in some of the various reviews and consultations, so we can expect a bigger discussion at some point this year.